Hi, welcome back everybody. So today I want to go through GBP AUD and USD JPY and talk about some devices that I see happening in the market right now. So first off with GBP AUD, I've been talking about this going bullish, but one thing I want to bring up is this range back here. And remember when price is ranging, we have orders stacking up on both sides of the price. So we get this chop. There's people in here buying, there's people in here selling, meaning there's stop losses of sellers above, there's stop losses of buyers below. Likewise, there's people who are placing sell limits or buy limits above this. So, in other words, there's a lot of liquidity to be taken on either side of the market. Whenever we see a range of accumulation or consolidation like this, there's liquidity on either side that the market makers can utilize in order to provide what they need to get another move. So let me explain that a little more in depth. If the market makers were looking to short this pair, ultimately, if they were to sell from here, and let's say their next target was, say, somewhere down here, just for example's sake, then we're looking at 846 pips, significant move nonetheless. But wouldn't it be more profitable if you were to sell from here down to the same place, an extra 400 or 500 pips, right? So this is exactly what market makers tend to do. And I'm not necessarily saying this is bearish right now, we're going to find out, but if market makers wanted to sell shares at a higher price in order to buy them back at a lower price, right, making the most profit, it would be advantageous to take all this liquidity firsthand. So the market dumps, and when it does, all these orders are activated, and you also start having people who just follow the trend, right? You have all these bearish candles, and people just start jumping in thinking, oh, the market's going this way. For some reason, people trade like that. They kind of wait for it to be going a direction, and then they get in on it. And then, obviously, their liquidity gets swept up from them. They become the liquidity. So we broke the range, came back down here, and then boom, this candle, liquidity trapped. And look how swiftly this moved back up through the range. There's only one candle in here that wasn't bullish, but it pushed up to this higher range, and now we see these series of pushes happening, essentially, but they're going higher each time. So what this tells me, and what I'm thinking about this pair, is that it's possible we see another higher high, but if that higher high closes somewhere in here, and then we start seeing, so let me see, draw something up like that. I don't actually know how high I expect this one to go. Like we could reach up into these regions because this is the next area that is of interest. This is the next place liquidity could happen. So we see something like that, another high happen, and then if we start seeing lower highs happening off of that, then this is where market makers are going to be selling the orders that they took in here, right? And that's exactly what I showed you. If we see a sell-off, we're gonna see a lower low beneath this point. It's gonna go further than that. So that's what I'm thinking on this pair. We're gonna see if it plays out like that. Just based off of this, I do think it's possible we see another push high. But again, price could just dump off. Price could continue bullish. The market's going to do whatever it wants. My only logic on this is exactly what I told you here. Liquidity was taken down here. They got a bunch of people to start selling their shares, and now everybody thinks the market's bullish, and they're buying their shares back from them. So if they do another push higher, it'd be a great opportunity to be selling off and actually take a larger move to the downside. But we're going to see on that. Let's wait and see what happens. So USD JPY, and I actually just completed a trade on this pair. I want to talk about a reversal mechanism that happens over and over, right? So whenever we have a significant move from a range, right? Significant, and I'm going to do the candle reversal just so you can imagine this with me. You have a significant move playing out, right? Several hundred pips, 1550 down to 148. Yeah, so a nice 250 pips. At this point that we experience a bit of confusion, especially like this bullish candle in here, there's two things happening. One is that traders are looking to buy right here. They're thinking the price is reversing already, so they're placing long orders somewhere in here, looking for wherever they're looking to go, and they're placing their stop losses right below this level, right? Then you have people that are on the fence about if this is going to continue going short or not. And they're waiting to see if it's going to continue, and if it does, they're going to sell. So remember, stop loss orders for long orders are shorts. It's the opposite. And likewise, short orders are short orders. So when we see this play out, this candle right here, when you start seeing this heavy bearish momentum, everyone that was on the fence is going to start selling, and all the people that went long are starting to get stopped out. So in other words, the market is accumulating a lot of sell orders. And this is what I'm talking about. So this device is you have this significant move and then a little bit of confusion where people don't know what's happening. And then you'll see one more push that is less significant than the previous move. But that's the point of that, is just to get all the liquidity before they end up taking a reversal. So if you want to actually catch the reversal here, a lot of people try to do it here. And this is retail price, right? This is wholesale price. So we want to wait for that opportunity to get wholesale price. Because again, what happens here is this played out pretty interestingly too. Price will often come back up to this region and test just below it. So giving another impression that price is just going to continue going downward. People still are looking at this and thinking, oh, that's really heavy bearish momentum. I better get on that. And then what ends up happening, because all this trapped volume was here, if price actually did reverse from a level, it's going to need to break above that in order to take liquidity. So as you see these arrows I've drawn here, we did break above this right here. I'm waiting to see if we're actually going to get up to this weekly level and then dump from there. Or we could be bullish. You know, it could go either way. But watch. Boom. Price moves up, goes straight through that level. Now it is still looking pretty bullish on this higher time frame. I don't know what it looks like to you. We don't have any signals yet for this to actually be turning around, but here, liquidity trapped, liquidity taken, reversal, and now price is coming back up. All the short orders that the market makers took long right here, they're looking to sell those again at a higher price. Now, depending on how much liquidity they took or how strong this move was, given it was a very significant move, we could see price react from here, maybe even come back up to this level, play around a little bit, and then sell off. Or we're going to actually see this begin to hold these levels, and we're going to be taking liquidity above this range. Because one thing I'm still curious about is, just like the range I showed you on GBP AUD, there's liquidity that stacks up on both sides of the range. And we did have these three pushes, but I'm not really sure liquidity has been taken on the high side of this range yet. So this could have been just a huge move to like capitalize on long orders, essentially, capitalize on people that are wanting to sell this and then taking liquidity here and then coming up through this range to take it on the other side. Or this is actually the move that the institutions have been wanting to make, and we're going to see it play out in here. Remember, our job is not to predict the price. Our job is to figure out logically, watch what price is doing in real time and notice the behavior in order to give ourselves high probability setups, such as this, which is coming right off of this move. I didn't even catch the bottom of it, but I could see what was going on. I could see that there was trapped volume here. This formed a bottom. It did this extra push in order to get all of those contracts involved, and then you can expect it to push above, right? Go look at your charts. Like, this happens a lot. But with that, I hope this makes sense to you. Let me know if you see anything different, If this is helpful, if you've learned anything, whatever you want, like, comment, subscribe, doesn't matter. I just hope you have a great day. I hope trading is going well for you. And with that, until next time, thanks for watching. Take care.